Welcome back, everyone. The CPI came out light, but the market still sold off from the highs. So remember, yesterday we got our consumer inflation expectations, and those actually came out light, which was great. And we got a nice little rally in the market heading into the CPI data. US inflation rate eases more than expected. The annual inflation rate in the United States slowed to 7.1% in November of 2022, the lowest since December, compared to 7.7% in October and market expectations of 7.3%. The month-over-month increase was only 0.1%, which was below this consensus estimate of 0.3%. As you can see from our data bars, this is a clear deceleration. The biggest spikes in inflation happened in January, February, March, and then there was a resurgence in the late summer. Now consider this, we're at the end of 2022, right? As we start lapping these much higher comparisons, the year-over-year data is going to start looking a lot better. We ended up getting a really nice pop in the market as soon as the news was announced right at 8:30 a.m., but all of these indices sold off dramatically throughout the session. For the S&P 500, first of all, take a look at the high relative volume. Look at this green volume bar. This is huge, so there was a lot of activity today. Zooming into our 5-minute chart to see what exactly happened this morning, we had a pretty huge spike at 8:30 a.m. right when this news report came out. We ended up spiking all the way up to 41.80, and then take a look. We kind of leveled off at about 41.50. And when the market opened at 9:30, we immediately saw some selling. And that selling really picked up at around 9:55. From there, the S&P pretty much gave back all of the gains from the morning. And then we settled out with a positive session, but with nowhere near the level of gains that we saw in the first couple minutes of the trading session. It was definitely pretty disorienting. It was a lot of movement. We saw stocks that were really just zipping out to highs. And then all of a sudden, before you know it, they're just crashing back to reality. On our daily chart, we did end up closing above the monthly value area. So it's pretty weird, actually. It really just depends on where you're measuring from. If you had told me 2 trading sessions ago, when the market closed on the lows over here on December 9th, that as a result of the CPI, we would be all the way above this monthly value area, I'd say, wow, that's incredibly bullish. That's an awesome result. Right now, the market looks like it's slipping into the abyss. But because we were trading so much higher at around 8:30, it almost feels like today was just like a big sell-off, scary sentiment, and it leaves things really up to interpretation heading into tomorrow. Zooming out to our weekly chart, the S&P 500 had a really nice run that began the week of October 10th, but we've had about 5 weeks of sideways consolidation after that huge run. And when we made that initial run, the market was pretty overbought, right? But now we've had this 5 weeks of digestion. At the end of last week, things looked a little bit dicey. Remember, we had tagged that teal downward trend line, and then we closed almost at the lows. So it looked like, okay, this is going to be one of those textbook scenarios. We've seen it at prior periods during the year. We tag this teal downward trend line, and then it's all over from there. But after getting this lighter than expected CPI report, we're trading right up to the upper bound of this 5-week range. And we're also trading, right up to that teal downward trend line. And we're also trading right up to the yearly value area low around 4,061.5. If you just remove a lot of the drama of today's session and a lot of that back and forth movement, I think the market's pretty much just saying, hey, the CPI was pretty good. Price was accepted at the upper end of the consolidation zone. But before we have the Fed meeting, it just really seemed like there was no push to break us out of this range. And it could have something to do with the fact that we as retail traders, we can just allocate our funds whenever we want, however we want. And we can get into and out of the market very quickly. With a lot of institutional outfits, they are a little bit more restricted. They are not able to move as freely into and out of the market. So for them, a lot of times they don't have the luxury of being able to just like sneak all their money into the market ahead of the Fed meeting and go that way. For them, it could actually have serious repercussions if they just get fully invested ahead of the Fed meeting and then Jerome Powell says something the wrong way and then all of a sudden the market's cascading. So for that reason, I'm kind of looking at today's session with a glass half full approach. The trend model remains at a +1. And for that reason, I did take my exposure up to about 50%. We did a fair amount of trading today. We closed out half of our Juniper common shares at our R2 pivot. We earned 2 times our risk budget on that trade. We took an entry in GFS. The stock ended up getting faded, and I ended up stopping out of that position for a 1-hour loss. My winning trades, I'm looking to gain 2 times my risk budget. If I have one nice winner where I'm able to sell into strength, that finances 2 losers. So for me, heading into this sequence, I knew this could be one of the toughest sequences of all year. It's very easy to get this situation wrong, and no one really knows what's going to happen. So I think it's okay just being like, hey, I'm going to put the amount of exposure that I feel comfortable with on, knowing that I could get stopped out. And if things go well and you get your profit targets hit, it's not like, oh my gosh, I'm having the best trading day ever. You don't really get too overly excited. And then on the other hand, like if your stops get hit, you're not like, oh my God, this is so hard. Like, why is this happening to me? Because it's basically just like, as soon as you put that risk on, you're basically parting ways with that capital. You're literally taking a risk to get a reward, knowing there's probably about a 50-50 chance that you're going to lose the trade. So it's really just thinking about your trading in like a much more business-like professional way. What else did we do today? I got long some Tesla common shares for about $164, and we'll see what happens. And then the one trade that I put on a bigger position was Pinterest. What I loved about Pinterest today was it had the gap higher like everything else did, but it didn't give back a ton of the gains. Look at Pinterest. We gapped higher and we ran higher. We ended up breaking out of this monthly value area. Look at the really nice volume, and it had a pretty good closing range, all things considered. One headline that crossed the wire that I wanted to put on your radar: the U.S. eyes giving Ukraine the Patriot missile defense system. I thought this was worth bringing up because this could potentially be viewed as an escalation by Russia, and it could have an impact on these, Russia, United States, Ukraine tensions. Nick Timiraos, who's basically the mouthpiece for the Fed at the Wall Street Journal, he did put out an article soon after the CPI, and it reads, Tuesday's report isn't likely to alter the Fed's rate decision on Wednesday. After this data, I could certainly see the dovish camp pushing more forcefully for slowing the pace of hikes to 25 basis points as quickly as possible. And this is a quote he put in the story from the chief economist at Jefferies. Heading into tomorrow's session, we've got more questions than answers. Again, I got myself to 50% exposed because I'm leaning in the direction that with the CPI coming out just a smidge on the light side, that the Federal Reserve is likely not going to rock the boat too much. If that ends up being the case, the market rips higher. That's great. If it ends up not being the case and the market's super weak and rolls over, I'm just going to take my stops, and that's that. With that said, best of luck tomorrow, everyone, on Fed Wednesday. If at any point you feel lost and you don't know what to do, just don't do anything. Make sure you click the like button on the video and subscribe to the channel. We really appreciate your support, and we are on the road to 1,000 subscribers. Have a great night, everyone.